Okay, I think we are going to start. Welcome everybody to this second webinar of High Gravity Impact Investment Solution event. We're very pleased to have you here today, and today's topic is the gender lens investing, an ESG play or direct impact. Maybe for those who don't know iGravity, briefly introducing us, iGravity is celebrating its 4th year anniversary. We are a company dedicated 100% to impact investing. We have 3 core pillars of activities: research and partnership, where we advise on innovative finance and outcome-driven financial tools for foundation mainly. Then impact venture, we invest in venture capital enterprise and advise on such mandates. And lastly, but not least, the investment solution arm, where we build diversified impact investment products and mandates, and where we launched our first product last year, the iGravity Impact Investment Index. Today, I'm very pleased to have 2 people joining me on the panel, two experts, and I will briefly introduce you to you. We have Robert Kraybill. Robert is the Chief Investment Officer of the Impact Investment Exchange. In his role, Robert leads the Impact Investment Exchange portfolio management activity, and he was behind the development and the launch of the first woman livelihood bond, which we will talk about today. And he's also leading the developments of new innovative and gender lens financial instruments. A few words on IIX, maybe. It was founded in 2009, and Robert, you can correct me, I think it's based in Singapore. It's a pioneer and global leader in sustainable investing, and the company conceptualized the first social stock exchange with the aim of moving impact investing from the margin to the mainstream of finance.
Thank you, Frederick. That sounds perfect.
Excellent. And together with Robert, we have Eugenia Domati Martini. Eugenia is responsible for the investment solution arm at iGravity. In her role, she focuses on investment selection and portfolio management, and covers all the different activities we have. So the index, but also customized mandates. She has more than 10 years of experience in the financial industry. And briefly myself, I'm a partner and head of risk at iGravity. I'm chairing the IC, and I've been for more than 25 years in the financial industry as a risk manager function. Okay, so with this brief introduction, I think a few housekeeping rules. I think you saw that you are on mute and your video is not enabled. If you have any questions, please use the tool for that. There is a dedicated function in the Zoom panel below, and we're very happy to address your question either directly if it's in the flow of the webinar, or at the end of this discussion. So which brings me to the core now. So let's jump in. Gender lens investing is a big theme. I'm sure all of you have been involved in one way and another. It's a growing market. So Eugenia, can you give us a bit of an introduction? First of all, is there a standard definition for gender lens, and how big of a market are we talking about?
Sure. Good morning, everyone. Let me just share a couple of slides. I hope you can see them fine. So in terms of definitions, gender lens investing can be defined as investing with the intent to address gender issues or to promote gender equality. And this, of course, can be done in very different ways depending on the strategy type and the different criteria that can be incorporated in an investment process. And these criteria, of course, can significantly vary depending on the sector, the asset class, and the liquidity. So just to give you a brief example, in public markets, the main key criteria often used is really women in leadership positions, while that is incorporated to screen companies fund managers invest in. While in private market strategies, managers incorporate more layered incorporation in considerations in the investment process, as we will see later. In terms of the market, we have observed significant growth, both in terms of public and private markets, with the public market strategies AUM surpassing 3 billion of assets under management in gender lens focused strategies across over 50 different products. And in private markets as well, we have seen assets raised reaching almost 5 billion of assets under management across different strategy types. So in private markets, it's predominantly venture capital and private equity funds, followed by private debt. And in public markets, it's predominantly equity strategies, long-only strategies, both passive and active, followed by mixed or fixed income strategies. And finally, in terms of the geographics, this has started, gender lens investing has started really as a US phenomenon, but it has been gaining traction in Europe and Asia as well. So also geographic diversity has been increasing recently.
So it's a growing market, Eugenia, as we see, extremely growing fast, like a lot of the ESG markets. You mentioned a couple criteria, but can you give us maybe more highlight about what are the different frameworks, or how do people classify gender lens investing?
Sure. So as mentioned, there are different criteria and different frameworks that depend on the asset class type, the liquidity, and the sectors. And at iGravity, we have looked at the different frameworks, and we have built our own gender lens investing framework, also linking it to an impact rating system. And our framework really builds on 3 different categories or gender lenses. So the first one is women in leadership. As mentioned before, this is the key screening criteria used in public market strategies, where fund managers really look at applying screens in order to select companies that meet a certain percentage of women in leadership positions, such as management positions or board seats. And while the positive effects and benefits of having more women in leadership positions have been demonstrated, we think this is only the first step. So the second category or gender lens in our framework is workplace equality, where managers wouldn't just look at women in leadership positions, but would also look at companies' policies favoring gender equality, including, for example, wage equity policies, safe and inclusive workplaces, paid family leave, and so forth. These first 2 categories or gender lenses really focus on ESG or governance specifically considerations. And as said, these are the 2 gender lenses or categories used in public markets. While the third category focuses on products and services provided that support women and improve their lives. And these are often used in private market strategies as well. So in this case, we focus, and this category focuses on the products and services that can substantially improve the lives of women. For example, in household and caregiving responsibilities, or investment improving health and education for women and girls. And within this category, we also include access to financing, access to capital and financing, which we believe is key in directly supporting and empowering women.
And Eugenia, I'm not sure, can you hear me? I have a bit
Yes.
of a screen problem. Perfect. How does it fit, within the iGravity view in these frameworks? How do we look at ESG, or do you think ESG does not have an impact? How how would you guide us here in that classification?
Yeah. So at iGravity, we see impact and ESG strategies as complementary approaches, with the impact being the positive effect or change of a product or service delivered, while ESG relates more to the process under which a product or service is delivered. And in the context of gender lens investing, we really want to focus on the products and services delivered that directly support women, rather than just applying ESG filters and considerations that are incorporated in the investment process, but are not the focus. In fact, you know, we for sure we have seen that there are now proven connections between, you know, higher proportion of women in boards and the positive relation between this and having high ESG performance, as it has been, you know, proven that companies with diverse boards often adopt better sustainability practices. However, we see this as a more indirect impact, and we want to really focus on those strategies and those investments that can really directly impact the lives of women, as we believe the impact potential is highest here.
Fantastic. And I think that's maybe something also to clarify, that we do see an impact in ESG sometimes, but clearly for iGravity, we're talking about impact investing as a strategy, and there are clearly some principles there to follow. So with that in mind for the audience, now moving to the Women Livelihood initiative, Robert, can you show us briefly how this is structured, and where does it fit within the gender lens sectors or segments?
Sure. Thank you, Frederick. And first of all, can you hear me well?
Very well.
Great, thank you. And also thank you, Eugenia, for really providing that kind of helpful overview of the GLI landscape. And I'll get into the structure, but first I'll focus on really what's shown here on the bottom of the slide. And this is really the whole reason we conceptualized and structured the Women's Livelihood Bond series. It was as a way to ultimately channel capital into organizations that are, you know, through their work promoting sustainable livelihoods for women in underserved communities in emerging markets. And so the key of all of this structuring ultimately is it allows us to channel capital to these organizations whose work we want to support. I'll talk, before going back to the structure as a whole, let me really talk about our GLI approach. Our primary focus here, and particularly in the Women's Livelihood Bond, but also really in all of our work, is investing in enterprises who through their work are bringing benefits to underserved women. And that, for the most part, fits very nicely into that last category and classification that you spoke about, Eugenia. So we're very often we're looking at providing capital to companies that provide products or services that benefit women and support gender equality. And so often that will take the form of lending, say, to microfinance institutions that will use the proceeds of our loan to increase their portfolio of loans to women micro-entrepreneurs, to allow those women to improve their livelihoods directly. We're also lend to, for instance, SME lenders that use our capital to lend to women-owned businesses that then small, and these are very small businesses, to look at and think, particularly in the context of the Women's Livelihood Bond, at lending to organizations that bring benefits to women as employees or as participants in their supply chains. particularly where that goes above and beyond what's typical in the industry they're in or the country they're in. So for instance, one of the borrowers that we lent to in the Women's Livelihood Bond 3 is a sustainable agriculture business that prioritizes working with farming households where the primary landholder is the woman in the household. So it's mostly products and services benefiting women, but it's also, we look carefully at the supply chains and their employment practices as well. Incidentally, we're also conscious as an investment manager of our own processes. So we are a woman-owned firm ourselves, and we're conscious to always have a significant representation of women on our investment committees. It's not that makes us an impact investor, but I think it's an important part of our own gender lens initiative. So if I could address the structure a little bit, I've mentioned before that the most important point and the reason we created the structure was to be able to channel hopefully capital at scale to a group of borrowers whose activities are such that we want to support. But so how do we do that? So what we've done with the Women's Livelihood Bond is to really set up for each of the bonds, and we've done 3 now, we set up a special purpose vehicle that allows us to, is really set up only to raise capital and then deploy it to these organizations. And so IAX acts as the structuring agent and the portfolio manager. We arrange a portfolio of loans to organizations supporting women's livelihoods. And then we conduct due diligence on those, both on the credit and the impact aspects. And therefore, we're able to go out to investors and present that entire portfolio where their funding will be used. And we, off of the back of that, sell listed bonds to those investors. The senior note holders, the bond holders, that capital is then used to fund the loans. And the primary source of repayment for the bondholders, of course, is that the loans perform and are ultimately repaid, allowing us to repay bondholders. But this is a blended capital instrument. And so there's a number of sources of protection for the bondholders. First of all, the bondholders represent about 90% of the capital we raise, but we also raise 10% of the capital in the form of subordinated notes, which act as a first loss protection for the bondholders. And a second layer of blended finance is the guarantee that we have from the US government. That is a partial guarantee of each of the loans that we make. So it protects from up to 50% of any capital loss that we might suffer on any one of those loans.
This is a great structure, Robert, and I think I like these blended finance elements, and we will talk a little bit more about the bonds. But before we do that, I wanted to challenge you a little bit on the proceeds, on the investments you do, and to what extent is it really different than microfinance? Because we know that microfinance in some countries lend almost exclusively to women. So how would you differentiate that aspect?
Right, that's a good question, Frederick. And microfinance plays an interesting role in the portfolio. Naturally, we are very supportive of microfinance institutions. We tend to lend to those that are lending either 100% or nearly 100% to women. And we think of microfinance in the portfolio as being, in a way, a balancing feature. And it's something that investors are familiar with, and they like to see a certain amount of the microfinance in the portfolio. But we also wanted to use the Women's Livelihood Bond portfolio as a way of expanding investors' access and expanding their comfort with other investing in other types of organizations that also benefit women. Actually, if you could switch to the next slide, I can talk a little bit about that progression as well. So in the first Women's Livelihood Bond, which we issued, The entire portfolio was in kind of financial inclusion of one form or the other. Only 53% of that was traditional microfinance, but all of it was financial inclusion in one form or the other. As we moved to Women's Livelihood Bond 2 and 3, we've also introduced sustainable agriculture businesses into the portfolio. And in fact, only 60% of the portfolio of the WLB3 was microfinance. Traditionally, beyond that, there was a degree of SME lending and then sustainable agriculture. And as we look forward to WLB4, our expectation, we're actually terming that WLB4 climate, with an expectation we'll be including clean energy businesses in the portfolio as well, and further reducing the amount of microfinance in the portfolio. So we hope to, over time, introduce investors to a wider array of investments. I'd also say when we do lend to microfinance institutions, and frankly, with all the lending we do, we try to make sure that our capital is has additionality. So we're lending to organizations that really value the access to the capital that we can provide. We're providing 4-year term loans, so that's often differentiated from the types of capital that these organizations can otherwise access, just typically 1 or 2 year loans. And we're also looking to provide capital to organizations that don't have access really to a wide variety of capital sources. We are choosing organizations that are mature enough that we're comfortable with the credit, but that may not have access to other forms of capital. And so we're lending to typically to lower tier 2 MFIs, sometimes to tier 3 MFIs, where that access to long-term capital is very valuable to them.
And then as a follow-up maybe on your last point, tier 2, tier 3, it brings the question about the capacity, how big of a capacity in this market is, and where do you see also potential trade-off you have to do as capacity grows. We talk about breadth and depth, within the GLI, but how do you see that evolution with issues upcoming and capital raising?
Yeah, that's a good question, Frederick. So I think there is, we have people on the ground throughout Asia. We're based in Singapore. We're targeting primarily, and have so far targeted primarily South and Southeast Asia, where we have people in the key markets. And I think there's quite a good capacity to deploy capital there. We've grown the bond, nearly tripled in size from WLB1 to WLB3. We think we can do a kind of measured growth beyond that. WLB4, we're aiming to be about $50 million. And we think there's plenty of capacity to absorb that. What we'd like, certainly in the microfinance markets, there's tremendous capacity, even in the lower tier 2 and tier 3 that we're targeting. But we are also seeing growing opportunities in sustainable agriculture, in clean energy access, and in other sectors as well. So we're comfortable doing that. When we look at, I think it's also important to note, when we look at evaluating investments, we look at risk, we look at return, we look at impact, and we are willing in our portfolio to trade off return for high impact, slightly higher risk for higher impact. And we're able to do that in a way, I think, that still allows us, because of the blended finance elements that we have in the portfolio, that still allows us to offer a product that offers a proper risk return trade-off to investors. This is actually after factoring in the guarantee and the first loss capital, quite a low risk proposition for bondholders. So we think that's an appropriate risk return trade-off to bondholders, even though we're able to possibly lend to organizations that have very high impact that might on their own be a little riskier or a little lower return than might be appropriate because of the blended finance we have in there.
Yeah, this is certainly an aspect we'd like to talk. And before I give a word to Eugenia to opine on this, there was an element I think we could share with the audience, Robert, is tell us a bit more about the liquidity of such a bond. I know it's a bond, so it's listed and so on. How do you see this evolving? Because today there's obviously not many trades happening on this bond. It's such a small issue. So what are your views on this liquidity and how can it evolve?
Right, right. Good question, Frederick. So you're absolutely right. The bond, none of WB1, 2, or 3, we've experienced any trading volume. But nevertheless, we thought it was important to list the bonds. Each of them are listed on the SGX, the Singapore Exchange. And we thought it was important for a number of reasons. One, it's just transparency and credibility. There's a process for listing that we go through. In the same vein, the bonds are accredited through ICMA and through the ASEAN social bond principles as social bonds. And so there's, again, a credibility and a disclosure aspect to that. We are forced to make public the disclosure documents, both the investor memo as well as periodic updates are made public. And so we think that's important, but we also think it is important as a prelude to liquidity to be listed. The bonds are sold in denominations of $250,000, so they're not intended to be the kind of thing that trades frequently, but we do think the possibility of trading is something that we'd like to encourage, and we see listing as a step in that direction.
Excellent. And maybe Eugenia, following the highlights of Robert on the bonds, maybe could you tell us how such a bond fit within an impact portfolio within iGravity?
Yeah, sure. So this bond was really attractive from both an impact and financial profile. As we have heard, I mean, it provides direct support to women. So that's a characteristic that we look for in any investment that we do in the gender lens space. And then from a financial perspective, we think it, as also Robert mentioned, had strong risk-return characteristics, thanks to the credit protection features and also thanks to the a profile that is decorrelated from traditional financial markets. And finally, being able to subscribe the bond on the primary market allowed us and allowed our investors to access niche investment opportunity with strong additionality. So that's why we think this is a great fit for impact investments at iGravity.
Excellent. And I see there is a question, Robert, that could be quite interesting, also talking about opportunities. How do you source non-microfinance investment opportunities?
Yeah, that's a good question. It's actually but one I'm happy to answer. Our roots, and we've been around in Singapore. We were established in Singapore back in 12 years ago, and we have one of our main activities now for over a decade has been working with high impact enterprises across a range of sectors to raise capital. So we've acted as an advisor, providing technical assistance to these businesses, helping them get investor ready, and then ultimately helping connect them directly to impact investors. And I'd say maybe 80 or 90% of that work has focused outside of the financial inclusion space. So we have for a decade now been working directly with clean energy access businesses and sustainable ag businesses and skills training and educational and healthcare businesses. So in a way that comes naturally to us. The trick there is of course a keen credit analysis as well as a gender impact analysis that we apply to that. But it's what we've been doing now for quite a number of years.
And so when is the fourth issuance coming, Robert? Because you're so positive about the market and the capacity.
Yes, yes. No, thanks for asking that question. We are, our goal is to bring that by the fourth quarter of this year. So the Women's Livelihood Bond 3 was priced and closed in December of last year. We'd like to be able to bring the WLB4 by the fourth quarter, and hopefully earlier in the fourth quarter. So October is our goal, October or November for that. And just to say, I mentioned before, we're looking for that to be a little bit larger at 50 million. We are definitely looking to have in top of the women's livelihood angle, also a climate action focus there as well. So including more sustainable ag, more clean energy in the portfolio. And we will be expanding at least a small portion of that into East Africa as well.
You said 50, right? Is that correctly?
That's the target. That's correct, yes.
Excellent. And maybe a last word for you, Eugenia. Where do you see our next gender lens investing opportunities?
Sure. So, so far we have been really focusing on strategies that provide and ease financing for women. This is the theme that is represented the most within our portfolios. If we could, sacrifice a bit on liquidity, then we could seek other investment opportunities in housing, for example, housing for women in need, or healthcare. But of course, here we're talking more about closed-end structures that may be available for us in the future. So far and for now, it's really about providing financing to women.
Thank you, Eugenia. Liquidity. It remains the strong word here. I'm looking at the time. I think we reach the half hour. So I would like to thank you, Robert. Thank you, Eugenia, and thanks very much the audience for watching us here. I hope everything was okay. I just had a black screen for 10 minutes, so I hope it was not a problem for you. As usual, we will send you an update, small 2-pagers as a reminder of what we discussed. I will welcome you to our third seminar in some weeks or months to be defined. So thank you, everybody, and have a good day.
Thank you.
Thank you.